Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It's Macro Monday. Let's take a look at some legacy charts. The stock picker's dream right now, lots of setups relative to the S&P and other indices. Crypto is kind of a mixed bag still, plus or minus 20% on any given day on any asset at this point. But last week on flows, we were again positive. This is a report from James at CoinShares. Over $1 billion in, most of that coming in from the US into IBIT, into BTC. ETH still seeing an uptick in flows. The rest of the alts, not so much, just still in a waiting game. You would expect staking to be positive to some degree. The question is, what degree is it going to be positive if we get staking in these assets? Obviously in the US, a lot of these don't have an ETF yet. And ultimately, if BlackRock decides they want an ETF of anything else, that's going to be the biggest determining factor. It's going to be interesting to see if we get altcoin ETFs without BlackRock and what kind of flows they get. Even Ethereum with a BlackRock ETF hasn't really had incredible flows relative to the market cap. They've been okay, but I'd imagine a non-BlackRock ETF for the rest of these might send a message that, hey, these maybe aren't ready just yet based on that institution's viewpoint, right? And that may help keep people away. We'll see. We'll see what staking does, what in-kind eventually does. But I can't imagine it's negative for flows or for price for that matter. We've bounced quite a bit since the weekend. We have these like weekend scares, scary Sundays where the real money isn't here and it's just crypto bros who are hyper reactionary. The near term, midterm still is probably chopped to down. It's great to see a bounce to 103. Unless we're above 106, 107, I just don't really care personally. I think this inverted head and shoulders idea is still plenty intact. The issue here is the trend metrics are flipping back to bearish at worst, neutral at best. Even the 1050 cross, which I don't have on here, is also set to flip bearish or has flipped bearish. Now we can get TK crisscrosses, we can get moving average crisscrosses, we can test the 20-week moving average, we can test the cloud. These are all things to watch for in the next coming weeks, but as we sit here today, unless you have a very firm conviction on where you think we're going in the next 6 months, I think it's just a tough ask for people to jump in at this point. But things don't look awful, right? We're still above the cloud. We're just chopping around. It's unexciting. We're seeing a ton of just intra-week, intra-day volatility for BTC, where I thought we'd see a better move, but I was still cautious because we were waiting on BTC was ETH. I still think ETH is going to be one of the stronger movers if the bottom is in. It's in no man's land here. There's really nothing to do. But as we'll see with a lot of these other charts, even if we just fast forward, if we go to Rocket Lab, right? Like this is the Bitcoin chart. So to see Rocket Lab breaking up for whatever reason, doesn't matter, just based on technicals, this is great for BTC. To see gold breaking up is great for BTC. It's great for crypto. So everything around crypto has started to tease a breakout. I talked about Dell last week. We're going to talk about consumer discretionary ETF. All these charts sort of look the same and they have broken out, whereas crypto has pulled back a little bit. So like I said yesterday, I think it's time, not price. I think it's going to take some time for this stuff to recover, but I still like how ETH sits relative to the group. Sol, a little bit in no man's land, maybe falling wedge as we reclaim 140, maybe a dragonfly yesterday. It's just very hard to say with any conviction, again, because the volatility here has been, we recover one day and then we sell off and make a new low 3 days later. So lots of ifs. If we can hold some levels, if we can make some higher highs, things starting to look decently flat, right? Like that's about as far as you can take it. Yes, we've had a big update today, but we've had, a week of down, right? Last one I'll mention here is Maker, if it's somewhere on this list. Maybe this is stablecoin bill stuff, I don't know, but I like where this sits. Again, I keep hammering this one because it's so much different. It is trading differently. It is trading better than most of these alts. So the thought process here is it is already strong in a weak period. If it can see continued strength in a stronger period, it should outperform. That's the goal here relative to BTC. And if we pull that up, this has chopped around a little bit. I still like how this looks. I still like that it's in the cloud. And I like that it's coming off of a multi-month downtrend consolidation period. So I think the crypto side is probably more wait and see. You're going to get eventually more bang for your buck, probably in Q4. July is going to be probably decent. It usually is. August, September, usually horrible. In the near term, I think there's legacy charts to trade, and we'll look at those. This week's calendar, really the big thing is PCE at the end of the week. A bunch of, the doomers are going to love all these numbers for whatever reason. They always love the little stuff that tends to matter less. But the big one's going to be PCE, which should be down month over month to a pretty decent degree. Now, we also had some Fed comments today and last week from Waller and Bowman, who are both hinting at the desire to bring rates down in July. We'll see if they have the ammo for that in the data. We will get at least another inflation print and unemployment print by the time they have that meeting. And they will probably have July's inflation and unemployment print at that meeting as well. I don't personally think they're going to see that justification in the data, but if they really wanted to, they could start to get ahead of this stuff and say, okay, enough's enough. Things are clearly slowly deteriorating in the jobs market. We're going to preemptively start cutting a little bit. Market's not quite there yet as far as expectations, still 77%. No cut for the July meeting. Trueflation has started to tick up a little bit more. We have, on top of tariffs, now we have the Middle East conflict, potential Strait of Hormuz stuff happening with oil, et cetera, et cetera, et cetera. Nothing too troublesome here, but you're going to see this roll into the inflation data, and you're expected to see CPI come in hotter this month. You can see PCE starting to come up month over month. Good to see core flat so far, month over month. Core CPI, I think, is definitely higher month over month. But this is the expected print for PCE. And it's going to get harder and harder for the Fed to just sit there and do nothing. Yes, we're not at the target exactly yet. Yes, it hasn't been 3 to 6 months of 2% prints. I can understand their justification for not cutting, but they're getting to the point where the data is looking decent enough to start to cut. So far, gas prices in the US haven't gone anywhere. They flatlined since the beginning of the year, and this has really helped the inflation data. On the energy side, used car prices have basically bottomed in January 24 and then have continuously slowly ticked up. And this is arguably what you've seen pre-pandemic. If you draw yourself an imaginary trend line, I still think we're above where you'd expect us to be, but this could just be the new normal, where this is the bottom, this is the baseline, and you'll continue to see data like this, even insurance data, just continue to slowly tick up, and it's bottomed, and that's that. And that's probably why we're seeing inflation also just go nowhere. The last mile, the 2%, is dealing with data like this, where, we're not quite where we would have been pre-pandemic, and now we're rising again. We stopped making lower lows, right? This is just one micro data point, but I think it's a great example of just the data as a whole. But if we start seeing failed banks pop up, consumer debt issues in the treasury market, issues in the housing market, beyond what we're already seeing, they really don't have other options besides bringing rates down or just risking stagflation. So I certainly don't envy them. Data very much on the cusp of being okay to being not okay. GDP still hanging in there at 3.4%, curling down a little bit, but overall this is obviously not a negative print and not negative to any degree like it was last quarter. And as we end Q2, I think it's fairly safe to say it's going to be a pretty big positive print come the end of the month. As for the markets, the big thing on the dollar here is, crypto people, we want everything yesterday and we want instant gratification, at least some of us do. So to see the dollar hanging out here sub 100 should be very bullish for crypto. Crypto should love this. It hasn't. Obviously, this is diverging from where BTC is going. We should not be correlating with the dollar. Global liquidity is rising because the dollar is falling. That should help crypto eventually. But what we certainly don't want is some sort of double bottom down here, triple bottom, inverted head and shoulders into Q4. We don't want our Q4 ruined, but I can understand if we bottom out to whatever level into 2026 and then we see the reversal. That would make a lot of sense to me. Definitely something to continue to monitor, but we're heading in the right direction. If you want dollar declining, you're getting it. And that's helping emerging markets. That's helping risk assets denominated in dollars. Certainly helping gold, which hasn't gone anywhere really since April, I guess May, but it still looks plenty good to me compared to most of the charts we're going to look at today, and most of the charts in crypto especially. This doesn't look like anything that wants to break down. It still has a inverted head and shoulders feel to it, still holding well above the cloud. Hasn't moved maybe as much as you'd expect relative to this Middle East news, but it's gold. It just does its own thing sometimes, and sometimes it moves at the speed of gold, which is not fast. So I wouldn't worry about this until it starts making lower lows, and it hasn't done that since May. So far so good. Doesn't have to break up, but I'd certainly bet on that breaking up. Look at the 10-year yield. Something else you don't want to break up, but it's kind of like, will technicals rule the day here? Will this try to break up or not? And it's kind of the inverse of the BTC near-term price action. This obviously goes since 2023, but above 5%, we're all in trouble in the 10-year. Above 4 3/4, and that's where the fear probably starts to kick in. But down here, 4.32, tolerable, decent, okay. We're a frog, we're boiling, but we're loving it. It's relaxing. Not that big of a deal. Risk assets probably start to do better the closer this goes to 4 or lower. And then we can fully throw this out. We can say we're below the cloud on some high time frame. The pattern is invalidated. And rates maybe not going back to 0 on the 10-year, but are cooling enough to give risk assets a tailwind to push them higher. That's something, again, to watch for into Q4. Oil, just a hilariously huge reversal of volatility. I can't imagine actually trading oil for a living, dealing with all these headlines and things, but still below the weekly cloud, really not much to say here. Still in bearish territory. So not a lot of technical evidence for bullish continuation. But again, into 2026, maybe something to watch. Maybe we get a giant inverted head and shoulders here on the dollar, on gold, whatever. Something to watch, but not now. This does not look at threat of mega bullish continuation, just on technicals, not incorporating the headlines, obviously. We'll skip the S&P because it's basically the Qs, and the Qs look a little bit toppy here. I don't think there's a short. I don't think there's a risk of a giant rollover, but if we're talking about an inverted head and shoulders breakout, we got to about 535, not quite to the target, not quite to all-time highs. And I guess the question here is, how patient do you want to be if you're still holding anything? I closed the remainder of a long I had on this from February. I was trading TQQQ and this. I opted to close TQQQ back then. I did not close this, held it this entire time, effectively at break even. So I took that as a win. But some justifications to be worried here would be a very, very tight trailing stop loss, which some people are going to love because, look, if you break 530, that's it. You're done. You're out. Thanks for playing. Williams fractals have been great since the breakout, since the run up. You also have a bear div here and you have a massive TKC clamp. So maybe this just goes nowhere. And on an individual basis or on a sector basis, you're going to see some dispersion. This looks kind of like BTC where, there's, what do you do here? Probably nothing. Like there's not, I don't see a strong setup here anymore after the move. I think this probably chops around, reconsolidates, and then tries for all-time highs later in the year along with BTC. But right here, right now, I just don't think there's anything to do on QQQ. You could almost say the Mag 7 ETF maybe looks a little better, but at this point, buy, sell, or hold. You're probably holding or selling. You're probably watching the same sort of thing here. Trailing stop losses, which I don't have on the chart, but that would be somewhere around 52.5. TKC clamp, rebuy closer to 50. It just doesn't look compelling to me to say this looks like strong continuation or a strong case for continuation. Here, that isn't to say it can't. It's just, you have to choose your battles. This isn't a battle I would choose to open a fresh trade here after this bounced and recovered as much as it did. And there's a lot of dispersion in the Mag 7. Apple looks horrific. Tesla had a huge bounce today. Microsoft all-time highs. Google pulling back. Amazon pulling back. So as a group, maybe it doesn't make too much sense to trade this ETF when you're seeing that amount of dispersion, at least to me. Of all the things, here I am, the IWM guy all of a sudden, not because I like what's in the IWM, the ETF. I like the setup here. I like that this is hugging the cloud. I like that it has a horizontal neckline. I like that it has a clear-cut case below like 200 for a stop loss. So I still like the setup here. I don't know if it hits 250, but if I had to choose today between QQQ and IWM, it would be this. And I think we may start to see that with alts a little bit, where people are playing the relative value game, BTC against anything, to just say, okay, maybe BTC chops around here at all-time highs-ish, while alts play a little catch-up. And I think that's what you're seeing here in IWM. You're seeing people look at the valuations in the Mag 7 and saying, you know what, maybe these are the best companies the world's ever seen and ever will see, but I'm going to buy something else here. So this setup to me still looks very compelling. And it's just gonna be funny if it doesn't matter and the Qs just keep going, Mag 7 just keeps going, right? And this just stalls out. But on a relative value basis, that chart looks great. Looking at some of these sectors, this is financials XLF. Same thing here. I just don't see much to do setup wise. Maybe you pick apart these individually and look at some of these charts and see if there's decent setups. But I like to look at the index and then just save my time and move on. So to me, I don't really see much of anything here. Just sort of middling in the range. Not really much to do. This is Consumer Staples XLP. Maybe a little bit of an inverted head and shoulders Adam and Eve combo situation going on here. Lots of consolidation since July 2025. Here's the holdings, obviously. Costco, just a monster. Walmart, another monster. Some of these charts individually may be looking a little better. But again, if you're playing the relative value game, buy, sell, or hold, QQQQ, which has already moved up 25%, or charts that look like this, which, okay, maybe they're not going to give you generational wealth, but on a setup perspective, look a lot better to me than something that's sort of just eking out chop after a massive bounce. So I really like XLP here. XLE Energy has been a massive dud. It's gone nowhere for years and years and years and years. Until this can hold above 95, I just don't think there's anything to do. And you can, of course, look at the individual components here, which I did not do, but as a group, just a big old goose egg, nothing. XLU, to me, still looks decent. I like this. I'm in this. I like the energy story. I like the AI energy adjacent investment thesis. Maybe lower time frames, a little head and shoulders-y action here, but still above the cloud, still hugging what would be the danger zone if it was at 88 up here or something, right? And I think it's close to all-time highs. And it's got a little bit of a defensive bend to it as well. If things do roll over, utilities tend to do a little better. URA, just a wild chart. Uranium, again, in this AI vein. It's almost doubled since the bottom. I was in this thing from 30 and just holding on. Still am. Chart still looks good. Again, I love the use case. I'm a big uranium guy, big nuclear guy. So I like the chart. It's in the commodity basket. It's in the energy basket. It's in the future basket. It's in the AI basket. It's in all the good stuff you want to be in right now from a narrative perspective, I think. We're also getting more stories like this. This is Ontario spinning up smaller nuclear plants. Whatever the timetable is on this, okay, fine. Like maybe it takes New York 30 years to build their 1 gigawatt of new nuclear power, whatever, right? Like this should all be beneficial for the narrative, the story, and the technicals don't lie. That's a massive bounce. And really it should be bullish for hash rate as well, which isn't necessarily bullish for the private miners, but as we get more and more energy as a civilized society, you're going to see the energy sponge, Bitcoin mining, just continue to kick up more and more hash rate over time. Mining is great at filling the energy gaps where there's excess energy that needs to be used. So it wouldn't surprise me if you have a chart side by side of nuclear power and Bitcoin hash rate, and that just continues to correlate. So it's great to see hash rate continuing to move up for the network. For the miners, maybe not so great, but for the network, looks great. This is XLY. I don't like that it has Amazon and Tesla in it, but it looks great. Cloud looks great. Looks like a cup and handle. Kind of looks like ETH, right? Looks like ETH that didn't break down. Still holding in that range. Anything above 216, 217 would be breakout criteria. Maybe this index without Amazon and Tesla might be better. Kind of some junk in here as well. But the chart is a chart. And this looks ready to me for some a decent upside relative to S&P and the Qs. Then if we go out further on the risk spectrum, we have stuff like ARK, which I think a lot of people have been talking more about because it's really picked up steam here. The cloud's had trouble with it just because it's very volatile. And since 2023, it's kind of been in this channel. It's hard to say up here, does this break out? Is this tradable? Is this anything? It's a tough ask for me just because I know it's in this. Again, Tesla, Circle, Coinbase, Roku we'll look at individually. That looks good. Roblox looks overbought to me. Temp, I'm not familiar with that one. CRISPR Hood looks overbought. Palantir, overbought. Shopify, not familiar with the chart. But just based on the components, this one's a tough buy for me, but it's done well. It's had a huge bounce. I just don't know where this fits in as a trade. Individual components, I think you play those rather than the index personally. If we go to Roku real quick, somewhere up here, Roku has a pretty tight consolidation reminiscent of an ascending triangle. And there are quite a few of these charts where it wouldn't surprise me if randomly deeper into Q4, they just start to explode for whatever reason, just randomly, right? Again, relative value, people are looking around what hasn't moved. These could have like a short squeeze setup. They could have some news catalyst. Like, it doesn't matter what it is. The technicals are clearly trying to keep this thing higher. Anything above 90, anything above 100 should be go time. But that's where news has the most impact, when technicals have consolidated like this for that amount of time. FIGS is another one. Continues to just bounce. Looks good. I like it. These are the types of charts where they just kind of do nothing for years, and then they have a quarter or a couple weeks for whatever reason, right? News finds them. People find them. And similar to Roku, stuff happens, right? I don't know why. It just does. Rivian, same thing. These are all kind of different industries that may start to do well for different reasons. But if I'm a betting man, which I am, I like this group of stuff just from a technical perspective. Another one that's just been beaten down for years and years and years. Cloud finally starting to pull up here for Rivian. So I like to take my chances on, charts that look like that. They're boring. They're going to take a minute to break out. QD, here's another one. I think this is Chinese or South Korean EV or something. I don't even know, right? But this is another one just kind of sitting here at $3 for years, reminiscent of an triangle, inverted head and shoulders above the cloud. This is the weekly. Maybe it goes to zero, maybe it doesn't. I don't know. But it's leaning towards a breakout. Rocket Lab we looked at earlier, but this is another one, right? We're talking about like way out there on the risk spectrum. Chart looks phenomenal. Absolutely phenomenal. You have a cup and handle. You have a W here on the handle. You've got a new all-time high threatening, decent upside. Love it. Love it. And I love this for crypto. I love this for BTC to start to see breakouts like that. Tesla's another one where hyper volatile, very connected to the cult of Elon, obviously. But putting that all aside, technicals are starting to swing based on the cloud back in bullish favor, right? You had your double bottom edge to edge. That was one trade. The next trade to wait for is what is potentially upcoming, which would be bullish TK cross, price above cloud. I don't think we see that anytime super soon, but if you're trying to wait for stuff to happen, just like back here, July you had a move, gave it all back, and then Q4 things took off. I don't think it would be out of the question to see this move in Q4 with crypto. If crypto moves, this will move in Q4. I think crypto will move more, but this is also setting up for something into Q4. So it is a little bit more work than just buying the S&P or buying TQQQ, but I do think there are a decent amount of setups out there that still look okay, that still look pre-breakout, and you can put your trader hat on and try to beat the market. That's all I got for this one. Give me a like, dislike, comment, share, subscribe, and happy trading.